What's going on, everybody? Today we're going to do a SPY or S&P 500 analysis together. I usually do this written out, or I type it out for you guys, but today I've decided to do a little video. That way we can all understand how I come to the process of creating an S&P 500 analysis, how I project things for the week, and just pretty much what we can expect from the week ahead. So first things first, we want to talk about the ending of last week and what's been going on for the past 2 weeks. So we can see that the S&P 500 has had a real struggle in September. You can see that we declined from the highs of 454. We saw a reversal candle. This is called a doji candle here at the top. Knowing that volume was decreasing as we were moving up, we were sort of expecting some sort of bearish move to come, especially with the relative strength being way below the previous high that we made here. So we kind of expected a pullback to take place, which it did. We came down to a low right here of 426, so we want to place a support right here around 426, knowing that this is the lowest point of the mini correction we had recently. Now the high is going to be your resistance right around 54, so your large range to work with here is going to be between 426 and 454, which is quite large. So there are resistance and support points created in the middle of this entire range that we can focus on if we were to go into the smaller time frames or the micro picture. So looking at this pattern specifically, we can see that from last week, we actually broke out above this channel down pattern that we were forming. So we're forming this channel down bearish head and shoulders pattern, and investors and traders were sort of worried that we may come back down and break below and continue moving down. However, we managed to break above and bounced above this 445 resistance, which is going to be our healthiest position to be in, especially considering the fact that we are above all these significant moving averages. You can see that when we broke below last month, we fell below and managed to come down all the way to the 100-day moving average before bouncing back, something that hasn't happened since back in October of 2020 and slightly happened in March of 2021. So after bouncing around this 100-day moving average, you can see we kind of were breaking below and coming back up, just bouncing around it. Buyers kicked in and they indeed bought the dip, and we broke above all these important moving averages, meaning that these moving averages now are going to be acting as supports again. So when we fell below them, they were resistance points. Now that we broke above, they are back to being support points, meaning that the closest moving average here is going to be the 50-day moving average depicted by the yellow line, and this is going to be our main support for the week. We can expect the S&P 500, to move something along these lines right here, maybe come back down, touch that 50-day moving average, and then continue to move up. Or we could see something like this happen where we come back down, we bounce up a little bit, and then we come back down to retest that 50-day moving average, come down a little bit, and then bounce up and continue to kind of go in this sideways pattern until we come back up and try to break out, kind of indecisive. So something to pay attention to this week is going to be earnings. So we obviously seen banks earlier in the week, like JPM, Bank of America, WFC, Wells Fargo, report earnings. And one thing that most traders and investors were paying to were bank earnings, because they wanted to see health and growth in the banking sector. So the banking sector is going to be a determinant for what stocks are doing right now. So what the overall economic outlook and what the overall financial sector, bank sector is doing in the United States. Very important that they report very good earnings. So as soon as we had those earnings, you could see right here that we actually bounced back. Many banks bounced up, and the S&P indeed bounced up as well. So very good news there. Looking at other big things happening this week, we are also getting large tech earnings. So Q3 actually ended last month, I believe the 28th or the 30th of September, but Q3 ended, so we're getting a lot of earnings now. Some earnings that we're focusing on this week are going to be companies such as Tesla, Intel, IBM, Netflix. These are just some large cap earnings that we're watching. We're not playing any of them. We're just watching them. We may play an earnings run up, but we are not actually going to be playing earnings. Other than that, we really don't have a lot coming this week. Earnings are just going to be the major focus of the markets right now. What we're doing is we're just scalping. We're staying, we're not really swing trading too much. We're focusing more so on quick in and out, scalping large tech companies that are having and experiencing this volatility. And we are also scalping small cap stocks, potentially swinging a few of them that are showing safe setups. But really, that's the approach that we've been taking here. So if you need a SPY S&P support and resistance points, like we said earlier, we could place a resistance right here at 454, a low of 426. In between, you have a support right around the 437.50 mark. And we also have another support right around the 431-ish mark. So the next resistance that we need to focus on is going to be the 448.25 point that we're going to need to break this week. So we may see the S&P 500 follow either one of these patterns before breaking out. This just kind of depends on all the outlooks that we get this week and the earnings and what investors think about the results that we get. Other than that, I just wanted to kind of make a quick little video. Don't want to get too in depth with anything. Hope you enjoyed and hope this was helpful.